The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends. As always, we like to do one thing, and that's come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And occasionally people don't know what I do that, but this is archived, and some people, I just want to let them know that I'm operating with the data available at this time. So I like to play that just so that there's not any question as to when I prognosticated. I think there's laws against that in some countries, probably in some states here in the U.S. too. So what do we have going on? We were down fairly sharply to 25.47 earlier on the S&P cash. Now we're off just 2.5 points. We've been up on just a few days out here that had next to no volume. We'll just say that. Let me get this. Come on. I wanted to get this up and I forgot. Okay. I forgot to actually click on this thing. So we'll do it right here. Okay, here we go. Because I wanted to get, nope, and it's missing too. I'll get to it in the next segment then. I'll go find it. But just for memory, we've been kind of bumping along at $245, $250 billion a day in the broad markets for trading. And, you know, even yesterday, I think it was $235 billion. Just there's not a lot of juice up here at these highs. And everybody, as soon as the market pulls back a little bit, decides that they need to buy them. I will also go after one of my biggest nemesis in the markets today, and why it seems that he's almost a shill for the market. Talk about that for a little bit. But one of the things is not all news has immediate reactions. And we'll talk about how I saw some news yesterday. Didn't really think that much about it, but man, by the time we opened this morning, there was a lot of people really kind of moving on with it. Or starting to believe it. Let me put it that way. I believed it for a while. I thought maybe it was already in the numbers. But that's kind of it. There's just not a lot happening. We're off 15 on the Dow. When you actually look at some of the bigger things like the NASDAQ, we're off 35. That's a lot more about what we're going to talk about, I think, today. And, of course, a little bit of history. And we're going to have kind of a little double shot of history today as the market kind of hangs here at 2.5 points down. But what is that history?
Then it's all just a little bit of history repeating.
On this day in 1982, automaker John DeLorean is arrested and charged with conspiracy to obtain and distribute 55 pounds of cocaine. DeLorean was acquitted of the drug charges in August 1984, but his legal woes were only beginning. Soon went on trial for fraud, and over the next 2 decades was forced to pay millions of dollars to creditors and lawyers. Nevertheless, DeLorean occupies an important place in automotive history thanks to its starring role in the 1985 film Back to the Future. His gull-wing sports car is one of the most famous in all the world. And man, there were so many great DeLorean jokes in the 80s. The one I always liked the best was, why was the DeLorean the first self-driving car? It could follow the white line straight down the street. He did do a lot of cocaine. His charges were basically trumped up, and he was basically found not guilty because he was going broke. And a lot of the people in Ireland didn't like him. Some people here in the United States wanted to give him the boot too. And there was more than a little bit of political pressure to throw him an anvil as his company went down. General Motors and Ford particularly were thinking that maybe he had a pretty good car. Maybe he could get going, and they didn't want competition, so they kind of leaned on the powers that be, and those people leaned on DeLorean, finding out that he had a drug problem, but also thinking that, man, if they gave him a lot of cocaine, he could sell it. He might just go ahead and take the huge deal, and they can wipe it all out. Ireland, of course, wasn't happy either because all the promises he made didn't work out. They took the molds for building all the cars. Instead of just dropping them out in the ocean, they sawed them up into bits and pieces and then took them out and dropped them all over the North Atlantic. They wanted absolutely to make sure that this guy could never come back. Kind of a history of some of these things in the past, especially in entrenched industries that can wield political power. But a lot in that. Of course, Back to the Future made it a icon to go on with. But I kind of always felt sorry for him. There are people who have drug problems. But what the FBI did to throw him in jail, luckily he had enough money to defend himself. A lot of people do not. But one of the bigger miscarriages of justice on that time. And, of course, if we go back 30 years today, I don't have a slide for this, but I did want to talk a little bit about it in this segment. Did I bring that up? I did not. Let's go ahead and pop that back up here. Oh, there it is. I did have it up there. I don't have enough time to finish it up here. I've got a couple of things that I do want to play also. So we'll get that into the next segment. But it was the biggest one-day loss in American stock market history, even bigger than the days of the crash of 1929. I found a couple of things while I was kind of researching and thinking about this. I've read about it in the past, and there were basically three things that caused this. One was people were starting to actually trade via computers, and this had a lot to do with the workstations that were becoming available. So we had the really first parts of computerized training. We had one of the president's guys decide that he was going to even further devalue the dollar, and that's really what got the ball started. The computers started to continue pushing on it, and then, of course, we had probably the worst thing that's ever happened. Those were the two short-term problems. And then we had the ghost of Christmas past. I'm not going to even call him a ghost. The ghoul of Christmas past, and that was Greenspan. And at this juncture, he came out on Monday and started privatizing profits and socializing losses. And it was the start of the moral hazard of the stock market. We get back and talk a little bit more about it. But all three of these things led to the worst day ever. And things got picked up Monday and Tuesday. We'll talk about this when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. Well, if you turned the TV on in 1987, this would have probably been something that you would have heard.
Good evening, everyone. Well, the law of gravity hit Wall Street today and financial markets around the world, for that matter, as stock prices plunged even more than they did on Black Tuesday of 1929. When the dust settled, the Dow Jones Industrial Average had lost more than 508 points on volume of 604 million shares. That's nearly double the previous record. We have reports on the impact of the crash from New York, London, Washington, and Chicago.
And, of course, wow, just a horrible day. And, of course, Greenspan came back in on Monday and started basically there were, if you get into the weeds on the subject, what you find out was that a lot of people had bought options, even though they were kind of esoteric at the time. And even though the government really didn't know it, they'd end up buying the bank that was behind all these options. So this was the first time that that Greenspan decided that the idea was not to let these things fail, that they could become too big to fail. And he started getting into the Chicago bank that the U.S. had, that the government had bailed out a year before. No one really even knew it. I think it got bailed out by Carter. And no one really understood that they actually had their own skin in the game now until they found out, and the losses would have been massive for the U.S. government for this day. And they said, well, let's just back this company until everything comes back to us, and it did. But this is the first day. A lot of people think, oh, maybe the GM thing. Well, a lot of that had its roots in this time, and the fact that we were, for some unknown reason, bought this U.S. Chicago bank that actually spent a lot of time as the back end of the options clearinghouse, and these things were just getting huge. A little-known trader at this time was actually making an absolute killing. In fact, he made somewhere around 90% of the profit for the next 3 years for the firm he was working for. His name was Nassim Taleb, and he come up with the idea of buying all these way out of the money puts and calls. At this point, he had a huge amount of puts in the market when it failed. And there's a scene that's kind of reminiscent in the movies of exactly what happened. If you get into it or see any of his discussions or his talks in Trading Places. What year did that movie come out? I can't remember. Trading Places, Wikipedia. Okay. What year is that? Okay. 1983 film. This was actually going to foreshadow what actually happened in 1987. This guy had a huge mountain of puts, and the market had its biggest one-day drop. There's a scene in Trading Places where everybody was just sitting there going, okay, you can have one, and you can have one. This is when they're in the pits, and everybody's on the wrong side of the market except them. And they're going, oh, I'll give you one. I'll give you one. And just slowly letting people off the hook. But on this day, well, actually, I guess it was more Monday, they were going through and taking care of a lot of these options and saying, just a little at a time, just a little at a time. By Monday, he was all out of them, and Tuesday, the market was starting to recover. But if you ever see that part where they're sitting in the pit, and he's just saying one here, you can actually see that that kind of market thing go to war. But that's almost a duplicate of what happened on those days. It made his bones as a trader, and eventually the guy's worth, what, $3 or $4 billion now, betting on things that only happen 5 or 10 years apart. And it's always interesting for me today, because someone made a comment in the den, and that comment was that it was a quote from Mr. Buffett about there aren't any people that short the market. They're on the Forbes 500 list. And since I've heard so many lies from Mr. Buffett, and I knew instantly that the biggest single trade ever was actually a short on natural gas. Natural gas was trading something around $16.75, if I remember right. This gentleman had maybe a bad year, in fact, a fairly bad year, taken $100 million, turned it into $20 million, if I remember the story correct, and basically bet his firm, and which was him and a handful of other people, shorting a former employer who was long out the gills to the point of being ridiculous in natural gas. They were actually, this is almost kind of a Soros taking the Bank of England to bankruptcy. These folks had been instrumental in actually running natural gas up to $16.75. Well, they were short, and they were short this thing until I think natural gas came back to $5 or $6. Anyway, that $20 million ended up being $1.6 billion and was the single biggest trade by proportion, even adjusted for for inflation. But if you look at the biggest trades of all time and a lot of the names in these folks, you know, they're more than probably half of the trades out there that are from short positions. And I hear a lot of people saying, well, you've got to be long Some people are always short. The answer is that bulls make money and bears make money. Only pigs get slaughtered. The market does go up and down. And the other thing that you should not forget, and that every trader I seem to bump into seems to kind of slough off, I think it's the biggest part of trading, is it's not the percentage of times that you are right. It is the return when you are right. And that's kind of why Nassim Taleb has always been my favorite trader. He did not confuse batting average with his paycheck. And something you can always think about. Senator Frank is in that. Yes, he is, First Boston. What can you think? It just kind of brought me back to it. One of the other things I did stumble across, so I'm going to have to play it when we come back. And then we'll get into the charts and Adobe. I want to talk about Apple for a little while, just because one of my biggest nemesis was out there pounding the table this week. And I've always found out that when I'm pounding the table, the market is more than willing to humble me. Well, there's probably no humble for this person. We'll talk about him also. But market's neither bullish or bearish. It's just what...
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. I found this. I just thought it was rather hysterical. But this actually came out of one of those movie reels in 1929. I just stumbled upon it.
Confusion spreads through the canyons of New York City's financial district, and men stare wild-eyed at the spectacle of complete ruin. More than 16.5 million shares change hands in a single day of frenzied selling. The paper fortunes built up over the past few years crumble into nothing before this disaster, which is to touch every man, woman, and child in America.
History does repeat itself to a degree.
Anyway, just thought it was actually pretty funny, but that was actually from a movie reel in November of 1929, late November. So if we think we have sensational TV and hack reporters, man, those movie reels were, they were. I think I was ready to jump out of a window myself. By the way, one of the podcasts I listened to goes on about things that maybe aren't quite true, and I recommended the rather large podcast guy ask if anybody actually truly jumped out of a window in 1929. And there's no evidence or newspaper reports of any suicides of anybody jumping out of a window in 1929. That seems to be a lot of hooey. Although in 1987, one gentleman actually did, because he was broke by 10 a.m. that morning, actually bankrupt. And there were several other people that were technically bankrupt in 1987 for about 45 or 2 hours. They actually, many of them you'll find, I think on YouTube, there's something, they actually wrote bad checks. And by the end of Tuesday, those checks hadn't been actually been cashed yet, and they just stopped payment on them because they were actually back in the black by the time Greeny got his deal on. But that's it. Anyway, Adobe, I guess the subscription model works for these guys. A solid breakout on volume, 8 million shares today. This, you can't ask for a pattern out here of a breakout to look any better, other than waiting back for a pullback to about 157 or so. So far, 8.7 million shares. You only needed 2 million. A lot of people on the wrong side of this got short over the last couple of days. One of the reasons I've been standing back, same reason for looking at stocks like IBM. IBM is basically didn't have that great of earnings, but had some massive short selling in it. In fact, let me, I think that's it right there. Let me pop this up real quick. You were having in the neighborhood of 20% shorts every single day before this thing went ballistic. So there were a lot of people trying to get in on IBM before it took off. Is there anything really any better? I looked at the results and everything over the last couple of days. Their numbers were up considerably on on cloud sales. But I think the only thing that really happened here was that these guys were able to actually get a little bit better results. And for me, this is I'm not short this thing. You know, it's going to be a year before numbers really truly turn around. But, you know, at some point, if you weren't short at 181 and you weren't short at 157, why do you want to be short down here? I think far too many people, one of the problems with being short, a lot of people don't want to grab the highs and short a stock. They want to grab the lows, betting that the stock and the company goes out of business. And that's always the hardest shorts in the world, whether you're a company on the verge of bankruptcy every day like BlackBerry, or you're IBM and have had, 40 quarters of negative growth. There's not much changing out here. Maybe the best thing that happened for the CEO is that she maybe modestly roasted the books so that she gets another opportunity, another quarter before Mr. Buffett gives her the he-ho. I had some people here ask some questions. What do you think on the Vesta Solar City Aussie deal? Again, if you don't have any money, it seems to me like you're a magnet for Mr. Musk. A lot of pie in the sky deals, I think, just probably not going to actually ever pan out. A few of these things are going to blow up in his face eventually. Google, Waymo, well, I don't know if you want to be the Uber people, because what your stocks, at least in secondary markets, about half. I don't understand what the wall is, what the moat is for any of these companies. I think you can have an entrenched position. And of course, none of these companies are public yet. But for me, the whole idea that these guys are going to know what's going to happen 5 years down the line and are betting huge amounts of money on it right now, I think is rather ludicrous. In the short term, it makes them look good. And a lot of times, if you're a CEO of a company and you're not growing, you have these kind of deals to make people think that maybe there's something out there. The old saying on Wall Street is, if you haven't pushed your, if you haven't set sail with a boat, your boat is not coming back in. If you haven't set, I guess it's a ship, right? If you haven't sent your ship out, you're not going to have one come in. Well, that's kind of what these guys are doing. So to me, it's a lot of make work and do stuff that makes people think you're going to make a lot of money. It's dubious at best. But again, I have the same problem with Netflix in FLX, which is, does the model work? And we're pretty close here on Netflix today, being back in this breakout range. You're really looking at the July 21st high, 191.50 with 9 million shares. You're back into it today with 5.4 million shares. Don't know how we're going to have it, but it looks like this thing could close under that 191.50 high. And again, if you make the content, then maybe that's a big enough moat that people will want to subscribe to you. The question is, do 100 other companies make their own websites and subscribe for $1 a month or $2 a month and have a whole lot less content, and people just kind of go a la carte? Netflix has got a fairly good position. They've got the early, what they tend to call in Silicon Valley, the incumbents position, i.e. they were first. They got to plant their flag. It's just, even if you plant your flag, how many companies went out of business in technology with superior technology? You need to have a moat, and I don't see a big enough one for Netflix. But these Uber companies, I see even less of a moat. We'll talk about that when we come back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we're going to get to Apple out here in this segment. Always interesting because, of course, more than a few times, our big friend Kramer will come up with some insane idea on why a stock should go up and down. And, of course, since he has a much bigger megaphone than I do, he will prevail, at least to the point of running me out of a trade occasionally. Since Monday, he's been pounding the table and sending, at least to my inbox, a huge amount of stuff telling everybody why they absolutely must buy every single low in Apple.
Bring me the head of the false prophet, Jim Cramer.
Well, today is an example of why pounding the table can make you humble at an incredibly fast rate. But one of the things I don't understand was that we kind of already knew this. There are, on Apple, the reason it's down, and we'll look at its brethren in its supply chain. Everybody had been pounding the table for the last 2 days trying to get this up, probably because they knew this was coming. But there's a few things that you know in industry. And J.D. Powers does a survey. They know they basically go to the 50 states and they know how many people registered cars and what those cars were. It's all public knowledge. So they know how many cars got sold, when they got sold, what models got sold, and how much they got sold for. So there's not a lot of mystery in it. Now, for Apple, you can't have a lot of mystery either, because guess who's in the second line, and that is the people that are actually selling the cellular service. So there is a company like J.D. Powers for all kinds of computer and electronic stuff. They came out with this yesterday afternoon, maybe about 1 o'clock, and I thought everybody already knew that probably Apple has mispriced their new products. It was also very weird to see that they didn't launch the 10 with launching the 8, but the difference between the 7 and 8 was so minor, but the price difference is so huge that people are buying the 7s in huge amounts over the 8s. and all you'd had to do is go into a store and see it. It wasn't anything new, but I think there's a lot of retail traders that just listen to people that pound the table a great deal. Now, could this happen to me? Could I have thought this thing was great? Well, I probably wouldn't have, because I would have seen all the volume on the way back up, so I wouldn't have been long. But at the same time, I don't know. If I ever pounded the table and said that this thing has to work, I normally say something a little bit smarter, which is the risk reward is as good as it gets. I can't guarantee any kind of outcome. Every time I think I get close to saying something like that, Mr. Market gives me a good kick in the teeth and lets me know I should be humble. But again, there's some things going on with Apple. I'll probably talk about that with Tom O'Brien in the 3:30 segment tomorrow on his show. But there just doesn't seem to be that much kind of mystery going on with Apple out there. Everybody knows what they're selling. You can kind of do it. But here's why I think you're going to see this thing gap down so much. That with the price drop of the 7 and compared to what they're selling on the 8, we're going to see margins come down in this quarter significantly. There's only 2 companies that have been able to hold on to 65% margins in the technology business. Certainly you get a lot more in biotech. But in technology, there's only 2 companies that have been able to do this for a while. Apple is one, Intel is the other. The rest, all fighting for it. But the kings of industry, Apple and Intel, are both in the 60% range of gross margins on their product. The price drop, you pretty much know what the 7 price cost is now. And that's about $205 or $210 for the components in that to manufacture it and get it all ready and out the door. So what happens when you drop a $700 device to $500? Well, those 60% some odd margins will quickly drop to 40%. And that is the biggest thing that can scare Wall Street firms that base their trades on long-term fundamentals. We don't, for the most part. I do kind of think of the long-term of the company, but literally people that quants that look at profit margins and how much less money they're going to have coming in. This is a big hit. And of course, you can make a fairly decent argument, as I have been talking about for a while. I thought this thing, this is about as good as it gets. But you can talk about a possible ABC in this thing. I think we did a little bit. Maybe it comes back here to me in a second. Yeah, it does. Gives hopes to the bear for a half hour. This too shall pass. Let's take a look at this real quick. Okay, you retraced 74%. So you got fairly good retracement on Apple. That sets up a 1-to-1 at 145, which I don't think you can think of. You got 142.20 down here from the July 16th low. I don't think that would be too far from something you could do. So let's take a quick look at Skyworks, SWKS, and see what we see in that. But this is going to make that SMH very tough to get forward. We're off only 34 cents on the SMHs. Everybody probably sold their Apple today and piled back into NVIDIA, which seems kind of the thing. But this, especially the SMHs, are getting narrower and narrower each day. Now, in Skyworks Solution, this thing's done nothing but go sideways. You do have a strong down day, but you're not out of the price range. This thing needs to break below 98 bucks. And if it does, there's a whopping gap down to about $83. What's the other one that we always want to look at? Avago. AVGO the other big supplier that seems to trade in Congress. Another one that says the same thing. So I'm not going to be one of these people that says that ABC down on Apple starts right away. You're not getting confirmation of that in the suppliers today. And Avago actually looks a little bit better. But my guess is that you're going to kind of see some sideways action between that 155 and 160 area on Apple. And then it's going to break, and you're probably going to get that 142, 144 area in Apple for the next leg down. When we come back, we'll take a quick look at Tesla. There's not much moving out here, but this is down $7 today, so we'll look at it. And then we'll wrap up the show. Of course, Tom O'Brien for the next 2 hours, Andy Heck at 5, and we'll talk about all of that and more.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets, right here on TFNN. Wow!
And, of course, you can always email me, probably a little too late today. I've had problems with my email, so if you did email something, I think it's just now working now. One of the first questions I did have, though, was did I short the market today? And the answer was no. What else can you say about it? I will, you've got to have fairly decent belief that the market's headed down in expiration week. and I did not have that. So when I saw the drop this morning, I didn't think about chasing it. To me, a move like today and then yet another failure might set up a good move maybe Tuesday next week. But I didn't see anything out here. The volume's been dropping forever. My guess is the volume's going to drop again Monday and Tuesday, and that probably would be enough time to get people past the whole freaking out of the 30th anniversary of the biggest down day in the market. But, you know, I'm not predicting. I'm saying and speculating that, to me, the next, after today's move, the next logical time is after options roll over, and that is late on Tuesday and into Wednesday. So to me, I didn't see that much. I've got a couple of short positions. They're kind of moving my way. They certainly haven't offered any strength now, but they are not index positions. So I'll sit on those two, and we'll see what happens tomorrow. But for the most part, just not a market that wants to move that far, that fast. And whether you are short or long this week, you know, you didn't make any huge money if you were trading. Now, maybe you made some money, but unless you were long Adobe or short some other stock that whiffed, there just wasn't that much money to be made. In the meantime, sell when you can, not when you have to. And we will see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.